This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's liquefied natural gas, LNG, imports are expected to increase at a slower pace in the second half of the year after blistering growth over the first 6 months, but the moderation is unlikely to put a brake on surging international prices. China normally steps up imports of the super-chilled fuel in the second half to meet winter demand, but buying has been curbed by high prices, a pullback in China's economic recovery and a lack of new receiving terminals, traders and analysts say. After 28% year-on-year growth in the first half, second-half shipments are estimated to rise 12% to 13% from a year earlier, said Ricky Wang, an analyst at Chinese commodities consultancy JLC.
Prices of heavy sour crude oil grades have been rising in the U.S. Gulf Coast, traders said, as the market braces for a disruption of supplies from Mexico in the wake of a fire that has cut state-run Pemex's oil output by about 25% since Sunday. At least 5 workers were killed and 6 injured in the blaze, which broke out on an offshore platform in the southern Gulf of Mexico operated by Petróleos Mexicanos, halting production of more than 400,000 barrels per day, BPD, the company said on Monday. It could take weeks for output and exports to return to normal, people familiar with the matter said, even as work is underway to restore power to the facility by Wednesday, and later connect 125 idled wells at the Kumalub ZOP, KMZ, cluster, Mexico's largest with a 750,000 BPD average output.
Moving on to the top news in the energy sector.
The Biden administration said on Tuesday it would take steps to restart the federal oil and gas leasing program in the next week and plans to hold a Gulf of Mexico auction as soon as October, court papers showed. The move comes 2 months after the U.S. Interior Department first said it would comply with a June 15 federal judge's order blocking its months-long pause in oil and gas leasing on federal lands and waters. That order was a blow to a key White House effort to address climate change by reining in fossil fuel extraction. U.S. President Joe Biden paused the oil and gas leasing program in January, pending an analysis of its impacts on the environment and value to taxpayers. Interior said in a statement that it is still conducting that review.
Crude inventories fell by 3 million barrels in the last week to 432.6 million barrels, compared with analysts' expectations in a Reuters poll for a 2.7 million barrel drop. Crude stocks at the Cushing, Oklahoma, delivery hub rose by 70,000 barrels in the last week, AIA said. Refinery crude runs rose by 66,000 barrels per day in the last week, AIA said. Refinery utilization rates rose by 0.2 percentage points in the week.
Next, we have the top news in metal markets.
Dalian iron ore rose in a choppy session, while the Singapore benchmark retreated from a 1-week high, underlining fragile sentiment as improved supply prospects could add pressure on prices that have collapsed due to weak Chinese demand. Iron ore's January 2022 contract on China's Dalian Commodity Exchange ended daytime trading 1.9% higher at 802 yuan and 50 fen, $123.90, a ton on Wednesday, off a session high of 829 yuan, its strongest since August 18. The steelmaking ingredients September contract on the Singapore exchange was down 0.4% at $147.45 a ton, as of 0713 GMT, after a 9.1% advance in the previous session.
Copper prices held on to recent gains on Wednesday, helped by signs of strong demand in top consumer China and a steep decline in inventories available in the London Metal Exchange, LME, warehouse system. Benchmark copper on the LME was down 0.1% at $9,369 a ton at 1611 GMT but above last week's low of $8,740. Copper is used in power and construction and many analysts foresee strong demand as fossil fuels give way to electrification. Prices hit a record high of $10,747.50 in May. We will now look at the top news in the agricultural sector. Brazil's Center-South, CS region produced 2.99 million tons of sugar in the first half of August, 7.48% less than a year ago, as the world's largest producer continues to struggle with drought and frost damage, industry group Unica said on Tuesday. Unica said that a survey with associated sugarcane producers indicated that Brazil's CS total cane crop in the current season would reach about 530 million tons, compared with 605 million tons in the previous crop. The group, which has not published any previous estimates on cane crush or sugar production this season, said that there is a downward bias on the 530 million ton number since around 1 million hectare, 2.5 million acres, of cane were hit by frosts, or the equivalent of 11.9% of the total area.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.